just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian markets extend morning gains with Nifty trading above 10,650 mark. Metal stocks rally after global metal prices gather steam.
The Supreme Court holds Anil Ambani and 3 Reliance Group companies guilty of contempt in the Ericsson case, orders Nasscom to pay 450 crore within 4 weeks or else Ambani goes to jail.
IT industry body Nasscom hikes the export growth guidance for the current financial year to 9.2%, retains domestic revenue estimate at 7.9% within the earlier range.
The 33rd meeting of the GST Council mulls tax changes in real estate and cement sectors proposed by a group of state finance ministers.
Prime Minister Narendra Modi holds extensive talks on trade and terrorism with Saudi Arabian Crown Prince Mohammed bin Salman, who is in India for a 2-day visit.
Also on the show, a bunch of interviews lined up for you. Airbus looks to set up a helicopter production line in India. We're going to be talking to Anand Stanley on the sidelines of the Aero Show in Bangalore. Indian Hotels plans to set up 100 homestays at the end of the financial year. Puneet Chatpal will be talking to us. So will Parth Jindal, MD of JSW Cement.
All right, let's first take a look at how markets are faring. Yatin is here as always.
Afternoon, Ira, and if you look at the market, 70 points up on the Nifty, and if you look at the advance decline ratio also right now on Nifty 50, that is 4 advances to 1 decline. So the advance decline ratio fairly healthy in trade today, better than yesterday. As you were mentioning earlier, metal stocks are doing quite well. So we have the likes of Tata Steel, Vedanta, SAIL, all of these stocks doing well, up anywhere between 3.5% to 4%. And more importantly, we have the government, which yesterday said that they will be looking to revise the minimum import price for aluminium as well as steel. So on the back of that news, we have all of these metal stocks active in trade. So is the case with Adani Ports as well as GAIL. These are the few names which are top gainers on the Nifty at this point in time. What's not doing well is the two-wheeler space. So Bajaj Auto as well as Hero MotoCorp. These are the 2 stocks in the auto space which are the top losers as far as Nifty is concerned. But do watch out for the mid-cap end of the market. We have ADAG group stocks which are declining in trade. So we have the likes of Reliance Infra, Reliance Capital declining in high double digits. Right now they have just managed to bounce from the day's low, 5% down for Reliance Infra. And also watch out for Jubilant Foodworks as well as Page Industries. These are the stocks which are rich in valuations, and I have seen some correction in trade today. So 5% down for each of them, Page Industries and Jubilant Foodworks under pressure.
Yatin, thank you for that. The Supreme Court has held Anil Ambani and 3 other Reliance Group companies guilty of contempt. The 2-judge bench hearing the Ericsson case ordered Nasscom to pay 450 crore within the next 4 weeks. Else, Anil Ambani will have to serve a jail term. Arpan Chaturvedi, who was in court when the judgment was read out, has his report.
Well, some very strong words in the judgment today against the ADAG group and Anil Ambani. The Supreme Court said that the attitude adopted was a very cavalier attitude. It came in the way of administration of justice, and the court has held Anil Ambani and the 3 ADAG group companies guilty of contempt, and the court has said that this contempt needs to be purged, and the way to do it is that they will have to deposit 453 crores in the top court within 4 weeks, and failure to deposit the money will result in a 3-month jail term for Anil Ambani. As far as the other group companies are concerned, the 3 ADAG group companies will have to deposit fines of rupees 1 crore each, and the failure to deposit that fine will result in another 1-month jail for Anil Ambani. So that's the crux of the Supreme Court order that has been passed today against Anil Ambani as far as the dispute between Nasscom and Ericsson is concerned.
The 33rd GST Council meeting is underway. The Council is expected to take up recommendations put forward by the group of state finance ministers on lowering taxes on under-construction buildings. Nikunj Johri, who's been tracking these developments very closely, joins us from Delhi with the issues and the options before the Council. Nikunj.
The GST Council is considering lowering of GST rates on under construction properties to 5% from 12% currently. This proposal is from a suggestion of a group of ministers that recommended lowering of GST rates on under construction properties to 5% without allowing the facility to avail input tax credit. The panel has also suggested that under affordable housing projects, GST on these should be reduced from 8% currently to 3%. Another proposal before the council is to have a unified rate for lotteries that are run by state as well as those lotteries that are authorized by states and run by private players. So another group of ministers has suggested that both state-run lotteries and state-authorized lotteries should be taxed at 18% or 28%. Currently, state-run lotteries attract a GST rate of 12%, while state-authorized lotteries are taxed at 28%. However, it's unlikely that both decisions on both these proposals will be taken because there's opposition from state finance ministers on both these proposals. State finance ministers believe that lowering of GST rate on housing projects is not going to reduce costs for consumers, and the proposal on lotteries is going to favor private sector players, is what state finance ministers think. So let's see what the outcome of this GST Council meeting is going to be. Over to you.
Nikush, thank you so much for that. Let's move on. Indian IT body Nasscom has revised its fiscal 19 export revenue guidance upwards. This after its members saw robust deal flows over the last few months, but it stopped short of putting up a guidance for the next financial year and put the findings of the survey instead. Agam is here to tell us what Nasscom has predicted.
Right, Harsha. So let me begin by how things stand at this point in time. For FY19, when it comes to exports, the earlier guidance was 7 to 9%. At this point in time, that's been revised to 9.2%, so higher than the upper end of the guidance. And as far as domestic guidance is concerned, that was again at 7 to 9%. And this time, it's been right in the middle of that guidance at around 8%. In terms of what we can expect in the upcoming financial year, while Nasscom has not put out any guidance, they did suggest that they have surveyed about 100 CEOs, and about half of them are expecting this upcoming year to be worse than what it was this time around, and the other half are expecting either the same or better performance as compared to how FY19 was. Moving on, we must remember that about a story that Bloomberg Queen did just a couple of weeks ago, where an aggregate of the top 5 IT companies suggested an 18% growth year on year for the quarter gone by, and this was the highest year on year growth that the aggregate of the top 5 companies have seen in 18 quarters. So that certainly is also something which is encouraging, but this is only as far as companies in the listed space are concerned. And once again, while we have seen considerable growth in majors like TCS, Infosys, Wipro, or HCL Technologies for that matter, we're going to have to wait and watch for how the rest of the industry performs.
Agam, thanks so much for that. Let's move on. Airbus made headlines a few years back when it tied up with Tata Advanced Systems to manufacture cockpits in India. The aviation giant is now looking to set up an entire helicopter production line in collaboration with M&M. Sajid Mangat caught up with the company's MD and CEO Anand Stanley and started off by asking him if the move was aimed at securing defense deals in India.
Anywhere in the world, when we are talking about defense procurement, it is a process, and the sovereignty of the process and the integrity of the process takes precedence over anything else. And we respect that process. We have a couple of programs we are talking about. One is the Avro replacement, which we are in the process very much so.
Who are you partnering with? Is a local?
We are partnering with the Tatas on that.
Okay, Tata Advanced Systems.
With the Tata Group on that. And we have concluded commercial negotiations, and we are in the process of that. And we're optimistic about it, and that program will be a sole factory that we will construct in India, and we'll manufacture. And what it does is, when you put an ecosystem like this, you will create about 2,500 jobs, and you will create about 8,000 skilled jobs in the ecosystem. So that gets created not only to manufacture the aircraft, but also the tier 1, tier 2, tier 3, and it becomes a sole factory for export. The same thing with the helicopters. We've just received the EOI for the NUH helicopter.
Okay, this is not the SP program, this is a separate one.
This is again, we have a partnership with the Mahindras in this. And we are very excited about it, and we believe as we progress through it, and once the contract is awarded, it's a competitive bid. There are multiple other people.
Where are we on that process?
We have just received the expression of interest, EOI.
Okay.
But as we progress through the process, again, there'll be a helicopter manufacturer in India, which will have a multi-tier impact on the ecosystem of India. All these programs, you cannot, I cannot emphasize the impact they will have on the I would say the multiplication effect on the aerospace supply chain.
So when you say that you're going to have manufacturing here, it will be a full system integration happening in India, or is it again going to be, aerostructures been made and assembled overseas and brought into India?
So this is a sole factory, not a satellite factory. So the actual, there will be only one factory in the world, and that will be in India. And then the tier 1, tier 2, tier 3 will be in India. And at below the factory, there is a minimum requirement of 40% of the next level to be also sourced from India, not from outside. So it will be quite deep in all these cases, which should give us a lot of hope and optimism in terms of the trickle-down impact it will have, not only on the manufacturing base, the supply chain, but also on the skilling, which is the biggest, I would say, advantage or the biggest benefit we would get from this program.
Well, Sajid also asked him about the Pratt & Whitney engine trouble faced by the A320neo aircraft. Stanley says Airbus is incorporating software changes to fix the problems, and Indigo can expect faster delivery of the aircraft.
Since the launch, as we've been reaching economies of scale with the A320neo and economies of scale on both engine options. By the way, we are seeing us reach a maturity rate on this. Today, specifically since you asked me about the Pratt & Whitney engines, we are seeing a reliability rate of 99.6%, which is excellent. Even regarding the reliability issues that, with the launch of the engine as they've been, we've seen reliability issues since the launch go up in absolute terms. In the last 12 months, we have been very focused on working with our engine partners, the airlines, the regulatory authorities, very actively. And we have incorporated aggressively a number of, I would say, software changes, a number of fixes, and also we've done a lot of, where required, a number of retrofits. What has led to is the Indian fleet has now been 95% retrofit, and in the next 2 months we will be 100% retrofit. Okay. These efforts have also led to a lot of fruition in many other ways. Over the last 12 months, we've seen, based on latest Pratt & Whitney reports that I have just received this week, between a minimum of 3 to 4x reduction in reliability issues, which is significant. Now, that reduction, where does it stand? If we talk about IFSD reliability or failure rates, we are right now at per 1,000 hours, the number of issues are 0.02. The global benchmark is 0.05. So we are significantly below the global benchmark that is monitored.
Does it mean that the delivery schedule for Indigo will now get faster as the reliability issues are now receding? So
we have had delivery issues more from a supply chain perspective because of the ramp up. But the ramp up has been very impressive last year. Last year we hit 800 deliveries, which was the highest ever.
Yeah.
And we hope to surpass that this year. Last year we had done 67 deliveries to India, and we hope to have an impressive number of deliveries again this year. So I think we are really maturing even in terms of our supply chain and our deliveries, and we are showing an ambitious growth rate year over year. And we have over a backlog still of about 500 aircraft, and which is a few years to come. And we hope to continue to aggressively cut down on that backlog through deliveries to our Indian customers in the Indian market.
Indian Hotels foray into the homestay segment with a plan to set up 100 properties by the end of the next financial year. The owner of the luxurious Taj chain will now open heritage bungalows and guest houses across the country under the brand name Amma Trails and Stays. Charlene D'Souza caught up with MD and CEO Puneet Chhatwal to understand how much this business will contribute to overall growth.
Normally, when growth comes in, your revenue should increase. But as most of our growth is coming based on management agreements, the only thing that gets added to our top line would be the management fee income, as the P&L is owned by the ownership. So I think there will be a healthy growth on management fee incomes by definitely around 20%.
Also this will, you've talked about your profitability improving, your EBITDA margins improving, and how will that improve? What are you working on to actually increase your margins? Because you've talked also about selling your non-core assets. Will that also help you in increasing your profitability, and also how will that reduce your debt?
So that is a good question, because see, when you sell non-core assets, let's say we sell 3 apartments, that is not a part of EBITDA. It goes below the EBITDA line. The EBITDA margin is really a result of operational excellence, in which you are improving the top line and optimizing your cost to get to a healthier bottom line. In what the first 9 months of this year have shown is we have gone north of 2% of the 8% that we had promised over the 5-year business cycle. So, and I see personally no reason why we should end the year less than 2. So we would have that 2% increase already in the first year into Aspiration 2022.
Also, can you tell us what's your debt reduction plan? Whether all of the money that you gain via the sale of non-core assets, how much will it be by 2020? What are you looking to, liquidate, and whether it will only be used for debt reduction?
Well, we have come to a very healthy level of debt, which is today at 2.33 to EBITDA, and I think if we can take it down around 2, ideally 1.99, that would be the focus of the management. And I think we can get to that number without selling any assets, by just improving our EBITDA margins, by improving our absolute amount of EBITDA and increasing our top line. And obviously by not taking new debt.
Management of Indian Hotels. JSW Cement, meanwhile, is hoping to increase its capacity by at least 50% over the next 2 years. The company is willing to spend another 1,500 crore to ramp up capacity at its existing plants. Nikki Mirchandani spoke to Parth Jindal, the company's MD, to find out more about the target and how he hopes to fund the expansion.
We're looking at expanding from 12.6 to 20 all through the organic route. Currently, as we speak, our 1.2 million ton unit in Jajpur, Orissa is in the final stages of being commissioned. So we're hoping that that will get commissioned by April. With that, our total capacity would be 14 million tons. And if you look at our spread, we would be present in 3 regions of the country: South, with about 8 million tons of capacity spread between Nandyal in Andhra Pradesh and Vijayanagar in Karnataka. West, with 2.2 million ton facility in Dolvi, just outside Mumbai, and in the east we'll have 2 units, 2.4 million tons in Salboni and 1.2 million tons in Jajpur in Orissa. So with that, we would be a 14 million ton company. Going into the future and going forward, we've already applied for various environmental approvals to further augment our capacities in each of these locations. So Vijayanagar, we are planning on expanding from 3.2 million to 5 million tons. Dolvi from 2.2 to 4 million tons. Salboni from 2.4 to 3.6 million tons. And Jajpur from 1.2 to 2.4 million tons. Further, we are planning on adding a greenfield capacity in Salem in Tamil Nadu of 0.6 million tons. So with that, we would be achieving a 20 to 20.6 million ton capacity number. And we're targeting to do this by the first half of 2021.
All right. Essentially, even after the expansion, the capacity will be pretty much until predominantly present in the southern part of India, right?
Yes. So southern part would be 10 million,
yeah,
and the western part would be 4 million, and the eastern part would be 6 million.
All right. And with this, how much fund will the company require for the expansion of 8 million ton, and how much of that would be through debt? And also, I'd like to understand what is the present operating leverage and how much would you be comfortable with?
So we would be expanding 6 million tons of capacity because the capacity addition of this 1.2 million has already been fully tied up in Odisha. So for a 6 million ton capacity expansion, we would be requiring close to 1,500 crore rupees. We would be generating close to 500 crores through internal accruals,
right,
and about 1,000 crores we would be raising from the market, from the banking sector. Our current operating leverage, we are running at a debt to equity of close to 2 times at the moment. My target is to bring that down to below 1.5 times.
Okay.
And our current debt to EBITDA is roughly 4.5 times.
Okay.
And our target is to bring that down to below 3 times. The reason our leverages are slightly stretched at the moment is because a lot of our capacity has been added over the last 6 months. So now that the assets are up and running and we're starting to sweat the assets, we see that our leverage ratio is really significantly tapering down over the next 12 months.
Also, your IPO hinges much upon the ramp-up plans. And can we expect that to come in by the second half of 2020? And what's the amount that the company would be planning to raise, and how much of promoter dilution will happen with this IPO?
So I think the safe estimate to assume when the IPO would actually come into the market would be in the first half of 2021. We are going to be starting the process at the end of this calendar year, and then it's a 12 to 14 month process before we actually file for the IPO. The promoters, we are looking at diluting roughly 15% of our holding in the company and looking to raise roughly 3,500 crores for that 15%. With the 3,500 crores that we raise, we would be fueling up further expansions going from 20 to 30 million tons. Because over the last 2 years, the company has been strategically acquiring limestone deposits through the auction around the country. So we have acquired a very large limestone deposit in Rajasthan. We have a limestone deposit in Gujarat also that we've acquired through the auction, and also we have a limestone deposit at Shiva Cement. So with these 3 limestone deposits that we have, we see enough opportunity to go from 20 to 30 million tons and beyond.
Kaveri Seeds is one of the largest seed producers in the country, and a subpar monsoon did not augur well for the company. But what's hurt the stock price more is the failure to disclose an important development. Darshan Mehta here to tell us what it is. Darshan.
Yeah, so basically the stock price is down almost 30% this month, and you add the another 10%, it was down 10% in morning trade. So almost 34% drop, at least as far as this month is concerned. A couple of things that happened. First of all, the numbers were weak. It fell twice. It fell 10% and then it recovered and then again fell 10%. The first time the results came out, extremely weak set of numbers. Revenues were down almost 6%, profit down 33%, and operationally EBITDA was down 97% because of cost escalations that came in. So that was it. Fourth quarter is seasonally weak for them. If you see the trend that happens, first quarter is the strongest. So people are anticipating that even the fourth quarter, given the trends that we are seeing, probably will be weak because last time around they had an EBITDA loss that time around. Why the fall that came in yesterday and today also, the Andhra Pradesh, and that came in after the conference call. The Andhra Pradesh government has actually cancelled the licenses of 13 seed companies. This happened a while back, but Kaveri Seeds chose not to disclose it to the exchanges, and then there were a lot of questions raised in the conference call that happened yesterday. So they raised questions, and then they finally said that it's a small matter. We see this resolving, but the main question was corporate governance issues were raised. When a large state has actually terminated your license, shouldn't you need to disclose that? It has a tune of what Motilal says is that if there is not renewal of this license, that could hit the FY20 revenues were anywhere between 6 to 7%, and the impact is also that they may not be able to capitalize on the favorable cotton season that will happen. The other concern is that the business risk persists due to volatile monsoon as well as the government regulation. The cotton seed volumes are declining in the key markets, and on a 9-month basis, cotton volumes were down by almost 12%. However, some positives are there that came out in the conference call. The strategy is now to focus on the non-seed business, which is growing. They have been able to gain market share in some of the key other geographies. They plan to bring down the corporate cotton dependence from 55% to 40% in the next 3 years, and they believe that exports will also pick up. So those are some of the positives that came out. Analysts, however, are bullish. The consensus Bloomberg target is at almost a 40% higher side, given the fact that most of the analysts have not cut their target price post the numbers that came out. But nevertheless, this non-disclosure issue is clearly playing out on Kaveri seeds.
Darshan, thank you for that. That's Kaveri seeds for you, and that stock taking a beating. Saudi Arabian Crown Prince Mohammed bin Salman is in India for a 2-day visit. Prime Minister Modi is scheduled to hold extensive talks on trade and terrorism with the Saudi delegation. Prince Salman may also announce infrastructure and defense investments during this visit. Meanwhile, business leaders from the two countries have gathered at the Saudi-India forum that's currently underway. Addressing a panel, Saudi Aramco CEO Amin Nasir and SABIC CEO Yusuf Al Banyan declared that India is an investment priority for the country.
A second round of trade talks between China and the US begins today. A Chinese delegation will meet Treasury Secretary Steve Mnuchin in Washington later today. Bloomberg News' Tom McKenzie reports.
Well, potentially some pretty broad implications for whether that's foreign inflows into China's capital markets or Chinese corporate holdings of dollar debt, or of course policymakers' ability to ease additional easing measures from Chinese policymakers. All of these things now are question marks around them if indeed this pledge to stabilize yuan does become enforced in any deal between the US and China. And what we do know at this stage, as you say, is there's been a tentative agreement. This has been discussed amongst a number or within a number of different talking meetings between the two sides, a tentative agreement to include a pledge to stabilize the yuan as part of a memorandum of understanding that would then potentially go to the two presidents at any future meeting to sign off on. And of course, President Trump on the campaign trail made a big play about calling China a currency manipulator. The Treasury Department found no grounds for pulling that in and putting that in place and labeling China a currency manipulator. But clearly, amongst the US administration, Trump's administration, this is clearly still on the agenda, high up on the agenda for them. In terms of China, of course, the PBOC and other officials have stressed that they do want to keep the currency stable, indeed, and that they will not devalue it as a response to the trade war. But clearly it remains a concern for the Trump administration. Now this is being seriously looked at by both sides.
Tom McKenzie from Beijing. Out of time on this show. Thank you so much for joining us today.
Lots more coming.